Okay, all right, Prashant, thanks very much for that. 17,300 odd was the intraday low for the Nifty today. But let's move on. In market opinion, Ed Yardeni, president of Yardeni Research, says the Fed will have to raise rates to bring inflation down. He adds there will be volatility across the world due to rate hikes.
I think what really has changed during February is a perception that instead of arguing over soft landing versus hard landing, we have to now consider no landing. And I think what the market's concerned about recently is an inflationary no landing, which would just be a long way to a hard landing after all, because the Fed would have to raise interest rates much higher to get inflation down. My thinking is that we're going to see quite a bit of volatility around the world, including India, mostly because the Fed is driving concerns about still higher interest rates. Look, the Fed has made it very clear they're not even thinking about lowering interest rates.
All right, moving on to more opinion. KV Kamath, who's the chairperson of NABFID, commenting on the Indian economy, said India will not slow down. He further stated that he expects infra growth to pick up.
We need to go in sync with the West. That's all I'm saying. Infrastructure, I see no slowdown. In fact, I see a speeding up.
All right, well, on to the second headline now. Bajaj Auto has cut production by 25% across its export plants. This is according to reports that attribute the weakness in export markets like Nigeria as the reason for this cut. Remember, the company has told CNBC-TV18 production has been lower for all two-wheeler exporters in the past few months. Sonia Shenoy is here with the details on this.
Well, thanks a lot for that. You know, this is a problem that is well known and documented, right? That the export markets are under pressure for most two-wheelers. And now, the production cuts have also come through. Now, Bajaj Auto reports indicate that the company will be taking a production cut as steep as 25% across its export plants because of the situation that's ongoing in Nigeria as well as in Egypt. Bajaj Auto could be cutting their production to around 250 to 270,000 units in March. This compares to almost 340,000 units on an average that they were producing in 9 months of FY23. We reached out to the management, who said that this is not new information in the sense that most two-wheeler exporters are under pressure because of the export markets that are challenging, and the production cuts have been ongoing for a while now. In fact, Nomura put out a note where they are expecting the export wholesale numbers for Bajaj Auto to fall drastically in the month of February. The data will be out in a couple of days from now. A 45% year-on-year slide is what Nomura is forecasting. They say overall the two-wheeler industry wholesales will continue to remain weak. In fact, the volumes for the two-wheelers in February will be 28% down from the peak that we saw in Jan of 2018. So no recovery in two-wheelers, and the export piece continues to be under pressure. Back to you.
Okay, all right, Sonia, thanks very much for that. So Bajaj Auto down over 5% in today's trading session. But on to the third headline today, a CNBC TV18 exclusive. Telecom major Bharti-Airtel was in talks with Paytm to buy stake in the company. However, the deal collapsed last month. Sources have told CNBC TV18 that Paytm declined to give up management control to Bharti-Airtel. Nisha Podar, who broke the story, joins in with the details.
That's right. Sources with direct knowledge who know about the developments in both the companies, Bharti Group as well as Paytm, have shared with us that there was indeed an exploratory deal talk between Bharti Group as well as Paytm in the month of January. But the deal talks did not continue and it collapsed. And at the current moment, there is no transaction on the table or no deal talks between these two parties, is what we gather from sources with direct knowledge. Now, that is a clarity on the present status of any such transaction. Regarding also addressing the reports which have been speculating about a transaction. But on the other hand, what really transpired is that Bharti Group, as we understand from direct sources, had been interested in buying a stake in the parent company Paytm, even though they have a common business of payments bank, which is under Bharti Airtel as well as under Paytm. So even even though they have commonality when it comes to business, it was the parent company, Paytm, in which Bharti Group was interested in probably exploring a stake buy, but the deal talks collapsed, as we gather from sources, because Paytm management was not keen on giving up the management control. Also, we gather that Paytm does not think that there is a strategic alliance even in payments bank business between Bharti Group as well as Paytm, because their models of doing this business are completely different. So those are the important aspects because of which the deal talks did not fructify and had collapsed in the last month. And at the moment we gather, there are no deal talks on between Bharti Group as well as Paytm. Time will only tell if at all there is a revival in this direction. But also remember that Ant Group as well as SoftBank put together own about 38% stake in the company, and Ant Group, the single largest shareholder, will have to shave off some bit of their stake because of the SEBI norms, which does not allow it to have a stake of 25%. So they'll have to bring it down and they'll have to sell some part of the stake. But experts do also point out, with such a large stake between two influential investors, well, they will also play a pivotal role in any deal transaction in future as well for Paytm.
Okay, all right, Nisha, thanks very much for bringing us what is one of the big stories of the day. But moving on to another big stock which was in the news, Dr. Reddy's from the Nifty space has announced the acquisition of Main Pharma's US generic prescription product portfolio for $90 million. The portfolio includes around 85 generic products, many of which are focused on women's health. The stock was down 2.5% on an intraday basis. It closed around 1.5% lower because the fear is that there would be US pricing pressure, which could probably impact the portfolio going forward. However, there is a divergent view that maybe the pricing pressure in the US markets has also bottomed out, and there could be eventual synergies within this portfolio and cost savings as well. Now, in terms of valuations, they've spent around $90 million, and it comes to around 1 times price to sales, which is reasonable according to analysts. So let's see. They do also have a couple of products which they are still to launch in the US markets, and that could be worth around $250 to $300 million as well, and hence it could be a lucrative opportunity going forward. So that's on Dr. Reddy's went shopping in the US markets. But on to a CNBC TV18 exclusive, Z Entertainment slid over 6% after sources had indicated that exchanges are unlikely to take a view on the company's re-entry of it into the F&O segment anytime soon. Yash Jain is here with the details.
Well, Ekta, if I could start with a little context on this thing, on February 23rd is when NCLT passed an order admitting Z Entertainment under the IBC proceeding. The very next day is when NSE came out with a statement which said that they've decided to exclude Z Entertainment from the F&O segment, citing that the company has been shortlisted under the IBC process. Now, of course, this particular order from NCLT was challenged before the NCLAT, and the appellate tribunal essentially put a stay on the NCLT order and decided to hear the matter later on. Now, after that, there were various queries from the market which essentially wondered whether after NCLAT's stay, would Z Entertainment be readmitted under the F&O segment. Now, what we've been given to understand from our sources is that exchanges are unlikely to take a view immediately on including Z Entertainment under the F&O segment. Now, exchanges essentially have taken a note that NCLAT for the time being has just put a stay on NCLT's order admitting Z Entertainment under IBC. But that does not mean that the matter has been disposed of. It will be heard, and a final outcome will really, trigger any decision from the exchanges on including Z Entertainment under the F&O segment. Now, of course, as far as exclusion from the F&O segment is concerned, there are various other restrictions which come on the stock. Because of that move, no fresh monthly contracts post expiration of the Feb 2023 contracts can be done. Existing March and April 2023 contracts will continue. Also, a margin of 100% on all existing derivative contracts on Z Entertainment starting February 27th also apply. So, of course, these restrictions till the time exchanges take a view on including Z Entertainment back into F&O segment will continue on the counter.
Okay, all right, Yash. Thanks very much for that. Time for a break now, but stay tuned. We'll be back in a jiffy with all of the other top stories.